Hi, this is Raman Gill. Welcome to episode 44 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will look at using an indicator on the charts. A lot of times we don't use indicators because we look at price action. However, there are some indicators that can help you in trading, and moving averages are one of those. I will show you what moving averages to use, how to enter the trade based on moving average crossover, where to place your stop loss, and how to exit the trade with a profit. Let's go check out the charts now.
Let's take a look at how we can trade using moving averages. This is CAD Yen 15-minute chart. Here on the chart here, I have 4 different moving averages. This is 200 moving average, 50, 13, and 5. And really what we're looking for is a crossover of moving average, or we are looking at a bounce off of a particular moving average. In this case, we have 2 long-term moving averages and 2 closer moving average, more of the short-term moving averages. So here, as we can see, price comes up and stays above the 200 moving average. So this is a good thing here. And here we see price stays over the 200 moving average, and then price crosses over above the 50 moving average. And as you can see, the shorter term moving averages that had been consolidating here also cross over to the other side. So once we see the moving averages cross over from below to above long-term moving average, that is a signal for us to take an entry. So as soon as the price crosses over here, we see moving averages cross over. You can enter a trade at the close of this green candle right here. That will be our entry. The stop will go on the other side of this 200 moving average. Make sure you put it below this line here to give it some room to breathe. Once we enter the trade, we stay in this trade till we see that the moving average is crossed over to the other side. Here we see that the price comes back, pulls back, and then closes below the moving average, but right away the price goes back above the moving average. So we would stay in this trade, and as long as the price holds above the moving average, we want to be in this trade. And as you can see here, price keeps above the moving average, and here we see that the price starts to stay below the moving average. So for 3 candles here have closed below the moving average, so we can exit the trade here, or as you can see, price comes back below the moving average after this, so we can exit the trade here. So either of those 2 places. But basically, in terms of the exit, what we are looking for is a crossover on the other side. So here actually the moving averages don't cross over yet, but at this point moving averages do cross over. So you could close a trade after this candle closes and the price starts to hold below the moving average. So that would be your general way to trade the moving averages. So the 2 important thing to remember when using moving average, different moving averages, is to, 1, take an entry once the moving averages, the slow moving averages, are crossed by the faster moving averages. And if the faster moving averages cross the slower moving average to the upside, that's a long trade. So we would buy in that trade like we did in this example here. And we would stay in the trade till the moving averages cross to the downside again, which will be over here. And we could exit the trade at that point. And another thing to remember is if you miss the moving average crossover, another way you can take the trade is the bounce off of the moving average. So for example, let's say you missed this entry, you were not able to get into the trade. So generally what we would have is price would take off and then pull back into the moving average. So that would be the place to take a trade, not somewhere in the middle here, but once the price pulls back into the moving average, and then you could go with it. So here, as we can see, we have a nice bullish engulfing candle here. So you could take a trade here and place your stop below these 2 candles here, just right over here somewhere, and you could stay in the trade for as long as the price stays above the moving average. Or this is another place you could take a trade because the price has bounced off of the moving average and it's holding above the moving average. So the only time you would not take a trade is when the price starts to trade below the moving average, then the trade is all done. So, or the moving averages cross to the opposite side. So here we see moving averages cross down, then the trade is done. So in this trade from entry to exit here, we had a profit of 138 pips or $1,380 if trading one standard lot. So this is a nice easy way to trade moving averages. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. You guys are a wonderful audience, and it's a pleasure sharing these trades with you. If you like this episode, please like, comment, and subscribe below. Hope you enjoyed the trade today. I look forward to sharing more with you in the next episode.